know Canada Nickel is advancing a set of projects in the historic mining camp in Timmins, where we will be the world's largest nickel sulfide region. The great thing about our type of nickel deposits, as opposed to the blood nickel in Indonesia, is we'll be producing more than 50,000 tons of nickel, and at the same time be able to store over 1.5 million tons of CO2 per year, taking advantage of our rock's natural ability to spontaneously absorb CO2.
So how do you foresee demand for nickel evolving in the next few years, particularly from the EV and stainless steel sectors here? What would you say are the key drivers of forward demand?
Yeah, if you saw the headlines earlier this year, that I would say the death of nickel and EVs has been greatly exaggerated. We've got twofold. One, the historic use for nickel has been in the stainless steel and alloy sector, and we've seen nickel demand growth over the last 3 years of over 10% per year. That's nearly double or triple what you see in some of the other major base metals. On the EV front, again, despite all sort of the disappointing headlines, the reality is EV demand growth has grown by more than 22% this year. Yes, there's more of a shift to hybrids, and those are up 44%. But underlying, full battery electric vehicles are up 11%. And for us in the nickel space, nickel demand from that sector is up 17%. So as you look forward, we're going to need almost 3 million tons more nickel by the end of this decade, which is effectively double where we're sitting today.
And that's why I think what you're doing is so fascinating. But at the same time, the regulatory risk is real here as we see this global competition between the US and China continue to unfold. And I want your take on some of the news flow we've seen regarding that. The US, of course, has been hiking tariffs to try and isolate China from its EV supply chain. What do you think that means for the critical mineral space, and what does it mean for a company like yours?
Yeah, I think this is really a once-in-a-generation opportunity for investors. You're seeing governments around the world in two ways. One, we just saw another round of tariff hikes from the Biden government in terms of a whole range of critical minerals. Trump's only complaint was that they didn't put the tariffs up high enough. And at the same time, through the U.S. and Inflation Reduction Act in Canada, we've seen a significant package of very generous subsidies. Have seen have seen a huge amount of potential government money come into the sector. And so, from an investment case, if you look at oil back in the early 1970s, Indonesia is now at the point where it controls almost 2/3 of global supply, which is more than OPEC at its peak. And you want the government to basically, get China, get Indonesia out of the supply chain. And, with those incentives that are in place, where we only need to provide a small fraction of the capital that's required to build these projects, effectively getting free leverage from governments around the world, and the price protection from these tariff walls that are only going to go in one direction. These governments see this as a national security issue. They want China out of these critical mineral supply chains. And so, we're in a great position being inside the wall in Canada to be able to take advantage of it.
Right.